All right, Salesforce stock is trading near its 52-week low, which was $226. Right now, it's trading at $233. In this video, I'm going to evaluate this company near its 52-week low and answer if this stock is a buy. A lot of investors are asking me about Salesforce stock, so I know a lot of you are curious about this company. So I'll share with you its details, its longer-term revenue growth, its operating margins, its returns on invested capital, and then I'll share with you my proprietary discounted cash flow valuation model, which calculates the fair value of the stock. We'll also look at valuation on a forward price to earnings basis, and I'll talk briefly about what the bear case is for Salesforce stock, which I always like to consider the bear case of every investment I'm considering, the bull and the bear case. So let's jump into it. Let's start with the company's revenue growth. From 2016 to 2025, Salesforce has increased its revenue from $8.4 billion all the way up to $38.6 billion. That's good for a compounded annual growth rate of 20%. For a long time, this company has been able to maintain this level of growth rate, which I don't think will persist. I think the end markets that Salesforce operates inside will be growing at less than this level, and I think Salesforce's revenue growth rates will decelerate over the next decade, over the next 5 years, to match the level of its growth rate of the end markets it participates inside. I am concerned, and this is part of the bear case for Salesforce, that the company will make acquisitions or overpay for acquisitions as it has done in its past. Now, there are some companies that are notoriously good at making acquisitions, incorporating them into their operations and benefiting from those acquisitions. Salesforce is not one of them. They've historically overpaid for acquisitions, and it hasn't resulted in improving performance overall to the level that matches the payment for those acquisitions. If you're interested in a company that does make very prudent acquisitions, that's Broadcom. Broadcom has a history of making prudent acquisitions that result in improving performance for the company overall. They've gotten a lot of credit for that, whereas Salesforce is kind of the opposite of Broadcom in terms of making prudent acquisitions. The next thing I wanted to compare or evaluate is the company's operating profit margins, and recently they have made significant jumps in this metric. Click the link below to watch the full video.